Last Wednesday, the Federal Executive Council in Nigeria approved a new medium-term debt management strategy for the period 2020 to 2023. The Medium-Term Debt Management Strategy, or MTDS, is a policy document that provides a guide to the borrowing activities of the government over a 4-year period. Now, Nigeria has had 2 debt strategy papers, the first between year 2021 and 2015, and the second between 2016 and 2019. Now, joining me for an exclusive interview on this is the Director General of the Debt Management Office, Patience Oniha. Good evening, madam, and we appreciate being with us on the show tonight.
Thank you for having me.
Thank you, madam. It's good to have you here. What are the key considerations of the Debt Management Office towards the preparation of this new medium-term debt management strategy document for Nigeria?
Okay, thank you very much for that question. I think your introduction to the MTDS was quite good, but let me add that in addition, to having rules and regulations that govern borrowing, it is good for you to have a set of guidelines, which is really what the MTDS is, a strategy that guides your borrowings to reflect your economic objectives and then have targets so that it is measurable. So for these specific ones, several things influenced the strategy, the eventual strategy and the targets. Let me quickly say that we had actually prepared one before COVID started. But by the time COVID started, the assumptions were no longer realistic, so we started afresh. So what is one of those assumptions? Of course, the GDP was now going to be negative in terms of growth. Secondly, borrowing was going to be higher. So if you remember, the first 2020 Appropriation Act had a borrowing of about 1.7 trillion. That had to be revised and became about 4.2 trillion naira. So it was revised to reflect lower GDP, new borrowing, increased spending, obviously, by the government for COVID-related issues, whether on social welfare or on infrastructure. But it also included the fact that there are several activities that are going on that will affect the debt stock. So you probably have heard about the promissory notes that we're issuing to settle the arrears of government. There's also the ways and means advances at the central bank. And then there are the debt stock of some state-owned enterprises, which, because we are a signatory to IMF, we are required to include in the debt stock. So what I'm saying, essentially, there are some debt that will come on balance sheet that have before now, except from 2018 when some promissory notes started appearing. So those were the key considerations. And I think the other consideration, which probably came as a shock also to everybody, is that the sources of borrowing, of course, had changed. So you remember we were very active in the international capital markets before, but with COVID, things changed. So those were the key considerations behind the strategy.
Now, when we talk about what you call facts behind the figures, a strategy behind the borrowing, that's the new document set out for 2020, 2023, what exactly, if you threw the initial MTDS, you put it back in the drawer and had to put up a new one, which has now been approved by the Federal Executive Council. So what are the contributions and the considerations from the Ministry of Finance, from the Central Bank, and others in putting it together?
Okay, let's just put it this way. It's a direct responsibility of the central bank. But because in working on a debt management strategy, obviously external reserves are important, exchange rates are important. With the Federal Ministry of Finance also, we're looking at revenues. And even with the National Bureau of Statistics, we're looking at targets for inflation and interest rates. So those are the contributions that come from all of those, and we analyze and then determine which strategy should be adopted. Okay, so those are like inputs into the process. But in terms of what that strategy should be, in terms of should we be borrowing more or less, what should be the ratio between domestic and external, those are then left to the debt manager, that is the DMO, to advise on.
Yes, so that brings us to the 3 parts to the MTDS, the MTDS target, the fiscal sustainability, the portfolio composition, and the refinancing risk. Walk us through this, Madam Director General. Let's start with the fiscal sustainability.
Okay, I think the very first one to explain is that before now, the debt to GDP for several years, the total public debt to GDP ratio was fixed at 25%, and we have largely operated within that limit, even though it has been increasing, but we have operated within that limit. But given the facts, some of which I have articulated, we had to increase that from 25% to 40% of GDP. Remember I said we were going to add, apart from the increased borrowing, so if you look at the medium-term expenditure framework, you will see the levels of borrowings are high all the way to 2023, exceeding 4 trillion each year. So there was no point leaving it at 25% when you know that you're going to do new incremental borrowing, you're going to add ways and means, you're going to issue more promissory notes to settle the arrears of government, and then you're going to add the debt of some state-owned enterprises. So the debt to GDP ratio was the first thing that went up. So in terms of fiscal sustainability, truth be told, even at 40%, we're within the World Bank and IMF limit of 55%. The reality is that that ratio could have been higher, but for considerations of debt service, which speaks to fiscal sustainability, really we kept it conservatively at 40% while we watch revenues grow. So that's as far as it goes for fiscal sustainability. Similarly, in terms of the debt mix, so our target in the previous MTDS was domestic should be a maximum of 60% and external 40%. And we started January 2016 with that ratio being about 85% to 16, meaning 85 external and 16 domestic. And in implementing that strategy, we were at the end of 2019 able to bring the domestic down to 67% and external 33%. But what have we done this time in this strategy? We have tried to be realistic and said that ratio should be 70% domestic and 30% external. And the reason for that really is that we have seen that with things can happen in the international markets that would reduce your ability to access funds from the international market. So it means we have to rely more on the domestic market. And this strategy actually recognizes the strategy is that there will be more borrowing from the domestic market. So let's just say that's one. We then needed to recognize that there'll be more borrowing from the domestic market than external. Okay, so that's one.
Madam Director General, if you permit me for us to take a very quick break, then we'll take the conversation from there to talk on that very important part of what you call the refinancing risk part of the MTDS target for 2020-2023. We'll be right back, everyone. Stand by. We're speaking exclusively to the Director General of the Debt Management Office, Patience Oniha, on Nigeria's current medium-term debt strategy 2020-2023. Madam Director General, thank you very much. We appreciate your time. We just want you to continue that line of conversation. You talk about the fiscal sustainability. You talk about the local and the foreign, the external debt mix. We'll talk more about your strategy for this year for the local market moving forward. But let's talk about the refinancing risk part of the targets.
Okay, so what we've done is that we set targets as well there and said that not more than 20% of the debt stock would mature within a year, and also that the average term to maturity of the debt stock would be 10 years. And how have we been implementing it or plan to implement it? So thankfully, we have 30-year bonds in the domestic market, and if you observe from the auctions that we have, we really are not issuing short-term instruments. We're issuing long-term instruments all the way to 30 years. So we think with that, we'll be able to achieve it. In the international markets as well, we have a 30-year bond. So we think we can continue with that. But ultimately, we expect the government's revenue profile to improve. But for now, we are actively borrowing in the long term. And thankfully, rates are reasonable. So that has been extremely useful.
But not many investors are happy with you, maybe with the central bank as well, that yield on treasury bills on government securities went to ground zero last year.
Okay, thank you very much. When you say the central bank and the DMO, okay, well, we are all government agencies. The reality is, and that speaks to the question you asked previously about the refinancing risk, the DMO is actually not actively borrowing to finance the budget using treasury bills. So that gap in the, if I may call it that way, that investors had some interest at the short end, was previously filled by OMO bills. Okay, so we simply refinance the treasury bills because we know that our preference is for longer-term instruments. So I think that gap, the gap came from a shortage, if I may use that word, of OMO bills. So we have remained, we haven't actually decreased the stock of Nigerian treasury bills. We have continued to refinance that so that there will be some liquidity in the market. But having said that, low interest rates was fairly common across the world, whether it's the US dollar rate or the euro rate. Rates were generally low, typical of periods of recession. So Nigeria wasn't unique in that direction. Mm.
Is the DMO looking to issue longer-dated bond papers locally? And what tenor are you looking at? And how soon will that hit the market?
Okay, I think typically we work with stakeholders. So let me see, when I say stakeholders, I actually mean investors. So we have a fairly diverse portfolio of investors. The banks are typically at the short end. Then we have the pension funds, and then the asset and the fund managers who are becoming extremely significant. So we have those discussions with them before we extend any tenor. Because in reality, we're offering a product and we want that product to be successful, not just one time, but on a continuous basis. So we would consider those discussions again. If you remember, we introduced a 25-year as well after the 30 years because the longer-term investors wanted something between 25 and 30 years. So let's just say we are open to considering more than 30 years, but we would need to engage with our stakeholders because liquidity is also important, not just that we want to issue it to raise funds. We also want to be sure that there's liquidity so that we can continue issuing it. That's the only basis on which investors will buy those securities.
You're very correct, Madam Director General.
So I won't commit to a tenor.
But liquidity is very important in terms of FX.
Not yet.
In terms of FX. Yes, in terms of FX inflows. What you do at the DMO is very crucial as well. What role does that play moving forward? Because now we have very serious FX liquidity problem.
Well, I would say that the central bank is aware of it. Don't forget, several years back, a few years back, not so long ago, maybe up till early 2015, we had both an active FGN securities market and an active FX market. And those helped, to keep both the FX market going and the FGN securities market going. We know what happened to external reserves, FX inflows. I think that's why there are challenges with the FX market. Having said so, while not speaking for the central bank, I'm sure we've seen several initiatives and several things change from last year up to this time regarding FX.
But if you look at the current debt portfolio, is it likely that Nigeria will request for a debt or debt servicing deferral anytime soon?
Put it this way, we're extremely conscious of the debt service level, which is why we have kept the debt to GDP ratio still at 40%. We didn't take up the offer from the debt suspension initiative, which the World Bank and the IMF championed last year because the amount was extremely small relative to our total debt because it was only bilateral debt, and then it was for 6 months. And most of our debt is either multilateral or Eurobonds and diaspora bond. So let me just say that we're looking at all options, and but it will be, if at all we get to that point of looking for debt relief, I can assure you that it will be looked at with very serious considerations and approvals from very high levels. But the challenge really is to increase revenues. That is the truth.
Is Nigeria's debt currently sustainable?
I would say that, very frankly, in terms of debt to GDP, yes, but debt service to revenue, we could do much better, much better. Okay, so far, let's be very clear that there has not been any default, whether of local or international debt. You are aware that some countries have had challenges with servicing the external debt, but we redeemed the Eurobond that matured on the 28th of January. So we're committed to servicing our debt for several reasons.
Are there any concerns about Nigeria's debt relations with China that the market should be aware of or be concerned about?
No, I know that last year there was a lot in the public space about borrowings from China. So all of the loans we have from China, Nigeria, the stock of bilateral credit, which is where China belongs, that we have, is small relative to the total stock. So loans from China are about 3.2 trillion out of, which was about 11% of our total external debt. Okay, so that was small, but to add, those are all concessional loans. They're concessional loans. There were no reasons to be worried about them. They are all project-tied, which I think Nigerians should be happy about. We can see the physical infrastructure, whether it's the airports, whether it's the rail lines, whether it's the roads, we can see them. So we don't see any reasons for concern. They're all project-tied, and they're concessional, really. So there was a lot of debate, but you did get, in terms of sovereign immunity and all of that, but you did get proper interpretations, both from China and from the Ministry of Justice. And we also, as a DMO, had facts behind China loans on our website way back in June 2020. So we are not concerned about them. They're all project-tied. They're concessional.
On a final note, Madam Director General, we thank you so much for your time. Are we looking at a return to double-digit yield on government assets, financial papers, anytime soon? How would I say, we're in the market, so it's a demand and supply thing. We don't predetermine the rates. We don't predetermine the rates, so we look at where the secondary market is. Inflation here is about 14. Inflation here is heading to about 16%, 16.47.
Yes, that's true. That's true. But securities are offered by auctions, so it's the bids that investors bid that we take and compare that to where the secondary market is, because all of those securities are traded in the market. So it's unfortunate that inflation is on the upward trend, but we operate in the market, so it's a bid offer matter. And then I think on a second note as well, really the interest rates are lower. It's good for debt service. So really, on our side, we shouldn't be looking for double digits. Okay. We pray that inflation comes down. That should be the target.
Thank you so much, Madam Director General, the Debt Management Office. Thank you very much for speaking with us, Patience Oniha, for this exclusive interview.